This is the daily outlook into Tuesday, June 30th. We can see that the previous day here was an expansion phase. We had anticipated for price to come back inside of the range, or inside the range of the inversion array. And by doing so, the market has created here a swing low, right? And what was mostly interesting, well, what I was interested in finding out, is, right, because again, we had an idea Monday was going to trade back in the range, but what I wanted to figure out was, will there be, say, a divergence at the previous high, or simply a sweep of it, or a displacement? Well, the market has proved to displace, right, its previous day's high, what was the previous daily high from the open of Monday. And so because of these reasons, right, the swing low, the displacement of the high of Friday, I do believe that a low-hanging fruit for the day of Tuesday will be the intermediate term high, right? And then from there, we'll have to see how price delivers, because price could sweep it to trade back inside of the range, or price could displace it, right? And then we'll likely reaccumulate into it to trade higher. Now, what would invalidate this idea, right, for this being the drawn liquidity, a divergence with the previous day's high, so with the high of Monday, that can be a factor where the market doesn't need to trade to the intermediate term high. Right, say Nasdaq trades above it, the S&P 500 fails. If this scenario happens, then I do believe that the weekly open will be the drawn liquidity. If not, for the time being, low-hanging fruit drawn liquidity is about maybe 1,000 ticks away or so from current levels, is the intermediate term high, right? So an ideal scenario for me, right, for the day of Tuesday at these levels, the fact that the previous day here was an expansion tells me that there's going to be key levels left behind inside of this range. I would ideally like to see an open low, high close profile, right, to trade towards this level. And, then from there again, the market could sweep it to reject, or could displace it and then reaccumulate inside of it. Okay, so that's that for the daily chart. I'm still interested, right now that the market has closed back above 50% of this inversion array. I'm interested in seeing if the market will use now these quadrants as reaccumulation to trade towards the low-hanging fruit buy-side pool. Right, if we look at these levels on the 1 hour chart, you can see that we have a range of fair value gaps here left by the previous day's range. And so I would like to see, say, for the market to do something like this to trade to this high. And again, if that will fail, well, then in that case, I'm interested in seeing something similar to this, right? Either, well, very likely with the market creating a divergence at the previous high, or simply a sweep of the previous high, because currently we have divergence with the intermediate term high. But if this scenario will happen, I do believe that it's going to be an Asia or London high of day, right? All depending on how Asia delivers. Maybe if Asia consolidates and London manipulates, then I do believe that New York could trade lower towards the relative equal lows and the weekly open. But if the market fails to do a scenario like this, then my preferred scenario remains something like this. Okay, so I'm paying attention to the levels of the daily suspension block here. I want to see if the market will use these levels to reaccumulate to distribute towards premium, or will the market create a shakeout around the previous day's high and or the intermediate term high, right? And for then New York to trade back inside of the range. the structure for me, although price created a swing low at these levels, I do still believe that the structure is bearish until this intermediate term high is broken and displaced above. I'm not 100% confident that will that will trade to all-time highs. I will be when the market breaks this level, right? Not only simply trading above it, but actually closing and creating some sort of fair value gap on the lower time frames through it. Then I do believe that we could be targeting all-time highs. But until that's done, I still have my suspicions that price could do this still for either today or at least going inside the open of the new quarter. If we look at price on a 3-week look back perspective, we can see that the previous day's low here was created at the upper quadrant of the discount order block residing inside of the range. Right, then from these levels has created an expansion higher and has created the range of a bullish order block, right? And you have another one right here. So I do consider this BISI very important, right? And so that's why my ideal scenario would be, right, a scenario like this. Now, once it's going to start trading here, that's when it's going to be important to see the reaction, right? Does the market sweep it to trade back lower, or does the market displace it, right, then reaccumulates inside of it and delivers to premium targets? Overall, right, well, we can look at this now on a 3-day look back. Right, so the idea coming inside of Monday here was that very likely the market was going to trade back inside of the range. Why? Because at 50% of the range there was nothing very significant. We looked at and what we had analyzed was that in premium there was a fair value gap, and in discount there was the range of relative equal lows. Right, so this was something that I was anticipating, and then from there it was a matter of seeing the reaction once price was going to trade near the previous high, right? Was it going to also at these levels the market trading back inside the range of the quadrants of the suspension block here? And what I was saying in the moment was that I was anticipating for the market after trading at these levels to distribute lower, and the reason why was because price overall in terms of daily profiles was coming from an expansion to a consolidation, right? And so that's why I was saying that this rally higher was suspicious to me. Right, so the market revisited these levels, reaccumulated inside of the range to distribute lower. This is exactly what it was anticipating. But then, what does it do? Once it distributes, it ends up finding a divergence at the weekly open with the S&P 500. Right, where the S&P 500 just stops inside of the range and continues to expand, and Nasdaq makes a new low of day inside of New York. Right, so this tells us that the daily profile here of the previous day was a bullish New York reversal profile. Okay, so this is an expansion profile. So if we analyze the phase of price delivery on the 3-day look back, you can see that we have the bearish New York reversal last Thursday. We have then on the Friday a bearish swing to Z, and the previous day's profile a bullish New York reversal. Right, so price comes from expansion to consolidation to expansion. Right, so expansion, consolidation, expansion, and has claimed 50% here of this premium SIBI, right? The SIBI here was located right at 75% of the 3-day look back. essentially the market has created a balanced price range through these levels, through the expansion of yesterday, right, through the SIBI. And so, okay, well, we can look at the range of the 3-day look back. Obviously in premium we still have that SIBI, right, which is important. In discount we have the range of a rejection block. This is the rejection block. This is the previous day's low here, right? The one that created a divergence at the open. So you got a rejection block slash balanced price range. In discount you have the range of a bullish order block at 50% of the range. You also have a series of fair value gaps that cut through the order block. And in premium you have the range of a SIBI, which the market has claimed 50% of this range so far. But I'm a bit less interested. I'm a bit less interested in now in the levels of the 3-day look back, okay, because the difference as to why yesterday I was using the levels from the 3-day look back was because the previous day coming inside of Monday was a consolidation profile, right? And it didn't leave me anything significant for me to anticipate with high probability where the low or the high of day could form. But now coming inside of Tuesday, right, the previous day was an expansion, and so we do know that expansion profiles tend to leave the range of order blocks or fair value gaps around 25-50% of the ranges. Right, and in fact this is exactly what's happening here. You can see that at 50% of the previous day's range we have a bullish order block, and at 25%, right, so in premium 25% of the previous day's range we have the range of fair value gaps. Right, now you got a couple in here, right? You got 1, 2, 3 of them. So I do like using, right, simply the 4-hour fair value gap at these levels. Okay, so this fair value gap will be pretty important to me. I do believe that if the market will be bullish, okay, it can create a low of day at these levels, right? Consolidation, manipulation, distribution. Obviously there's an order block at 50% of the range here. So if the market early on starts breaking below these levels, it's going to be important coming inside of New York to see what London did once Asia invalidated this 4-hour BISI. Did London from these levels reclaim the fair value gap, or did London from these levels reaccumulate inside what it now uses as an inversion array? Right, and based on the price delivery located around this fair value gap and analyzing what the different sessions did, I do think that is going to give you a good bias and should also give you where the drawn liquidity is for the New York session. Okay, so little recap. The market comes from an expansion. The market has created a swing low on the daily. So because of this, I do believe that a low hanging fruit drawn liquidity will be the intermediate term high on the daily chart. Right here, this is a swing high that fills 50% of an inefficiency. And so I'm interested in seeing the reaction at these highs. Right? Does the market displace? Does the market sweep these highs, or does the market not even, right, it doesn't trade at all to these highs? If it doesn't trade at all, then I do believe that it's going to do so, creating a divergence probably at the previous day's high. Right, or if not, we'll have a shallow run above the previous day's high. It will respect the range of the bearish mitigation block, and it will trade lower to come back inside of the range. But ideally, my preferred scenario, since price comes from a swing low and price comes from a bullish New York reversal, I would like to see an open low high close profile, and ideally the low of the day, right, located either at 50% or 75% of of the suspension block here. And obviously once it trades to these highs again, will be very important to see at what time, if it does trade to it, at what time of day did it trade into it, or is it trading into it. And then very important to see if the market is willing to displace or not this range, right? Is it only sweeping this range, failing to displace? Then in that case you could anticipate a reversal profile or some kind of consolidation profile, all depending on, when you're coming inside New York, how Asia and London traded. Right, did these levels trade back in the range and New York opens at these levels, then you know you have to watch out for this type of profile. I'm not saying the New York reversal, but likely that the market can consolidate, right? That as we're going to be trading inside of a bearish order block on the daily, right? You still got the range of a bearish mitigation block and obviously a SIBI. The range is pretty high, right? It's tight here. We're trading at 50% of the monthly range. We're approaching the closure. And so if you don't see something very obvious, such as, right, an open low high close profile, or an open high low close profile that has to do with the sweep of the intermediate term high, or with the sweep of the previous day's high followed by the inversion of PD arrays left by the previous day's range, then that's where I would be more careful to short, where I would require more information from the market. We saw on the 4-hour chart that the market has created a fair value gap, has created the range of a couple bullish order blocks here, and did so after reaccumulating at the upper quadrant of the bullish order block of interest. Right, so that's why I'm saying I do believe that the low-hanging fruit drawn liquidity should be the intermediate term high inside of the range, and then from there, again, very important to see the reaction, right? Because it could do this, it could do this, or it could do this for all that matters. On 3-day look back, we analyzed the phases of price delivery. Price comes from a bearish New York reversal, right? So expansion, to a bearish swing to Z, so consolidation, and the previous day's range, right? As we were anticipating, price to come back higher, to trade lower, since price was in expansion to consolidation, right? And that's where we anticipate that there will be another expansion lower. The market does do it here, but then invalidates it through a divergence, right? So this daily profile represented by a bullish New York reversal in the phase of price delivery. This is an expansion. We do know that expansion profiles leave PD arrays of interest, and we analyzed this range, right, where we saw that the market left a 4-hour fair value gap at 25% and a bullish order block at 50% of the range. Okay, so if the market will revisit these levels first before trading higher, I do believe that this favors an open low high close profile. If the market will trade higher first before revisiting these discounted levels, then I'm going to want to pay attention to how the market treats this intermediate term high. And I don't mind still trading long if it will trade from these levels. It has just a shallow run on liquidity inside of the range and then opens at these levels. I don't mind still trading long, but I do need to see this range being displaced. And what I don't want to see is price to be choppy around it. I want to see price leave this range quickly. because if not, this is going to give me the suspicions that it's going to want to do something like this, right? Okay, so I think that covers it. So good luck and good trading tomorrow.